Well, we had a lot of fun last week in the mountains. Managed to actually do some business meetings as well and get in a full week of trading, believe it or not, from the ski lifts and the chalets and everything in between. But this week I am back in the office and I wanted to go through one thing in particular. Before we look at that, though, let me just remind everyone that it is through the lens of an active investor or trader fairly silly to fight the market too much. So, which is to say that as long as a market is trending in one direction or another, it is usually best to stay the trend in that direction. And for right now, of course, that trend continues to be higher for the S&P 500 here at least, and pretty much all the other U.S. equities. Indices. So, from that perspective, we do want to respect that trend and we don't want to fight it. But there are two things that I want to quickly point out. Number one is this concern that we haven't yet seen a new high in momentum, but price has of course made a series of new highs over the past couple weeks. More importantly, though, is what I'm seeing in the Nasdaq 100, and this is really representative of what the share price of Apple looks like. I do think this move is getting increasingly exhaustive, and I'll show you more about this in just 1 second on the chart of Apple. But you can see here, this is just, in my opinion, an unsustainably steep and low volatility move that I think ultimately will lead to something a little bit more like this before potentially going higher. So that's something that we're looking at. Number two, again, let's look at Apple, because of course Apple is the largest component of the Nasdaq 100. If you look at where Apple is coming into, and again, this is not a bearish call on Apple. I very much believe in the company longer term, but it is coming into its previous, in fact, it's overcome its previous all-time highs from 2015, and through the lens of technical analysis, it is usually, I would say, almost impossible for a stock to rally this strongly into a previous point of resistance, a previous all-time high, a previous important all-time high, where we had a triple top, for lack of a better term. So most of the time you'll see some sort of backing and filling here before we ultimately potentially resolve higher. So I do think here the Nasdaq 100 is certainly giving us a bit of a cause for a pause. If you look at the Nasdaq 100 in relative terms versus the S&P 500, so we were going to do QQQ divided by the SPY. You can see here too, we're actually coming into an important relative strength high that I think, considering how far we've rallied, will be difficult to be able to continue at this rate. So the Nasdaq 100 here and Apple, again, I don't want to be short them right now, but I do think that the rate of change here has been a little bit too low volatility, and too orderly to the upside. So a bit of a caution note there as we start the new week.